Ladies and gentlemen, audiences from different parts of the country and the world, esteemed speaker and viewers of the session, good evening from Female Innovators Hub and Department of Innovation and Entrepreneurship, Daffodil International University. We are delighted to make this important session on pitch your startup to an investor, how to take preparation. Today, I am Beauty Akter, the founder and CEO of Female Innovators Hub, would like to this session. Let me welcome our speaker of today's session. We are happy to have Mr. Miguel Martín, the founder and CEO of Talentia Ventures. Mr. Miguel Martín is a startup investor, mentor, and evaluator from Spain. He is also Glocal ecosystem builder and connector, impact innovation and investments, and working on corporate social responsibility, ESG and SDGs internationalization, fundraising, and etc. So we have a great speaker with us who will be talking about how to pitch your startup to an investor. So without any further delay, I would like to request Mr. Miguel Martin to share his views and presentation on startup pitching.
Hi, everybody. It's a pleasure to be here with you, and thanks to Isaf and Beauty for this invitation, Asif and Beauty for this invitation. I think that I can share already. Hope that you are sharing correctly my screen, because every conference is using different tools, and we are learning at the moment. So today I will be talking about how to prepare and how to present in your project or startup to international investors. First of all, as I was saying, I want to thank and acknowledge Asif and Beauty for inviting me, and also all the different supports and collaboration entities that they are involved. A little bit about me. As I was introduced by Beauty, basically I have been for more than 20 years involved in international business and cross-border investment and expansion. I have a large experience in different countries for helping traditional business and digital business to grow internationally. And right now, what is taking more time from where I'm focusing is connecting local and global startup investors, ecosystem and initiatives, and everything that is involved with impact, entrepreneurship, innovation, and investment, and SDGs, the Social Development Goals from the United Nations. Right now, I am the president of the United Nations SDG Science and Tech and Innovation Subcommittee and the World Business Angel Forum. Also, I'm the lead co-organizer for Spain of the Entrepreneurship World Cup. I'm the chapter director of Star Crime and mentoring different global initiatives like Seed Star, Bridge 4 Billion, and Tech to Impact. As well as investor in the 4 Years From Now Investor Club. It's a club from the Mobile World Capital, Faster Capital, and the Europe Startup Alliance. Today, I am very happy to be with you, and anyone that want to contact me can contact me by LinkedIn. My username is Miguel34 for the country code Spain, and Martin, Miguel34 Martin. So today I will be talking basically about the basic docs that you will need to present your product your project to international investors. And later I will be giving some tips for fundraising, and also tips for how to practical tips about dealing with investors. So the first document that you will be using is the one-pager. One-pager is in my opinion, the most used document, and this is a possible template. There is many, but most of them, they have the same information, or that is the main information you will normally find. And as the name indicates, is a one-page document that summarizes the project main information. In my opinion, the most important contents will be the problem and opportunity, but especially everything related to the team, because as we will see later, the team is normally the key factor for investors deciding to invest in a company, in a project or a startup or not. So you have normally a very how to say, short sentence to pitch, to present your product, your project. That's the pitch, the problem, opportunity, the solution and product, the business model, the market, the competitors, the competitive advantage, the roadmap, and the trusted or KPIs that you will find in case that the company is already operational. The team, as I was indicating before, and if you have any advisor, even mentors or investors that have already invested, that is also a very interesting backup for the company. And if you are fundraising and raising capital, obviously how much money you are asking, where do you want to invest or to dedicate that amount of money, and obviously the contact information. Here is for later. This is a very long presentation. I don't think that we will have time to review all the different slides. But if anyone is interested to have a copy, they can request to the organizers to ASIF or Beauty, or they can contact me in LinkedIn, and I will be happy to share it. Basically, well, that is already.
You can present, yes, you can present the slides now if you want.
I have been presenting the slides. I thought that I was showing the slides. You don't
No, we cannot see your
know?
slides. Yeah, no.
I thought that I have been talking and talking, thinking that you see my slides.
I was thinking that you were not presenting slides, but you can do it now. No problem.
Okay, so uh, okay now.
Yeah, it's coming. Yeah, that's fine.
Okay, I'm very sorry for that. I really thought that I had been told. So I will be going through the slides very quickly, not explaining
Okay, no
everything
problem.
again, but just to show what I was trying to explain before. I'm sorry for the confusion. So I don't know why it's taking too long. So well, that is what I was saying about my LinkedIn, in case that anyone want to contact me later. The one pager summary. This is the pitch, problem, opportunity, solution, business model, and market. Competitors, competitive advantage, execution or roadmap, and the traction, and the numbers, the financial KPIs. So the second document that normally is quite important for investors is the deck or investor deck. Initially, you will be contacting an investor, and with the one pager. One thing that I will be recommending later is that you never ask an investor. Normally, a professional investor don't sign NDAs. I never sign NDA, even if I am myself a lawyer. I analyze more than 1,000 startups per year, so I don't have time for signing NDAs, and I don't have time to, how to say, to take any ideas for myself. So what I want to identify is good projects where we can invest and not to copy an idea. So the second document that normally is coming after the one pager is the pitch deck or investor deck. that basically contain the same information that we were commenting before, but explaining it in more detail. You can have this. This is a very interesting table that show a comparison of the some very key players on the entrepreneurial ecosystem, like 500 startups, Sequoia, NetSpew Ventures, or different unicorn companies. And the initial pitch deck, what different contents they have in each one, and you can see them more or less. The content is more or less the same in all of them. The final document that you normally will be using is the Canvas business model, and basically it's another way to present your project. I imagine that I don't know exactly which is the audience that we have today, but I imagine that these three documents are the basic of any project that want to present their venture to potential investors, or even to compete in any startup competition, or to present the project in different in any other kind of event. So I will not be. You have here the information. You can ask me for the information, so I will not go for the details. Practical tips. Then I think that is more important. What really investors are looking for in the startups. As I say, the first most important is the team. If the team is a very balanced and experienced team, it's even better. Normal investors don't like the solopreneur projects, so one man team projects is not the most how to say popular for investors, because obviously they don't want to depend on only one person. Regarding experience, it's obvious that projects with founders and they have already experience, ideally than they have sold a previous startup, they have a better chance, or a higher percentage of success rate than the projects than they are launched by new young entrepreneurs. So later also it's important to show traction or KPIs in case the company is already in that development phase. If you have clients or customers or registered users, any other data, then show them you have validated your idea, and the growing number of people is find that you are offering something interesting and useful for them. Obviously, talk also about the business model, what are going to be the different income streams that you have identified for. But it's even more important is the execution, and to do things more than just to have a clever idea that is not implemented. So as I was commenting, team is the first factor of investors when they decide to invest in a company. The potential market. So what market is? How big is the market that you are addressing and you are trying to target? Here you have different KPIs depending if it is the world potential market, or is the one that you can achieve in your country, or through the means that you have. The third question that normal investors really like is you go for ideas or projects that they are easy to understand. And if they are not easy to understand work, it make it easy to understand for people that is not technical people, because we as investors we see projects from all kind of sectors, industries, and technologies, and we cannot be experts in everything. That is a tip that I will be giving later, is that try to focus in investors that you have already researched and identified, and they are more interested in the industry, technology, or challenge that you are trying to solve. because you will have a much better chance than they will become interested. And if they become interested, they can provide much more value to your project than just not the capital. That is another important thing, is try to find smart investors, smart capital, not only how to say passive capital. This is more for the stock market and other kinds of investments. For startups, normally they should try to find an investor that will provide expertise, experience, and networking, key networking to grow local and internationally. So the point number 4 is, as I was commenting before, is the traction, is the how the company is growing. Normal investors, they don't invest in ideas. They want to see a prototype, MVP, or something that is tangible, than to know that you really have validated and checked that the solution is possible to be and interesting for the potential market. Later, the investing in startups is a team sport, meaning that normally it's quite important to show with advisors, mentors, investors are with you in your project, in your venture, and if you are able to attract important reference in the ecosystem, you will have a much better chance to get how to say other investors coming. The most important and difficult part is to find a good lead investor. Then if you find a good lead investors, normally you will have a very good chance of closing an investor round, because getting the secondary investors or the followers investors is much easier than the lead investor. And finally, investors seek to make deals and to create value with a exit horizon, because it's when they will be how to say cashing or getting the return of their investment. You have to understand that investing in startups is a risky business. Normally, around 70% of the startups don't live more than 5 years, and around 20% of the startup give return, but not a big return, and only 10% of the startup in the portfolio of a business angel is giving how to say the big return that will be how to say compensate or give an average of ideally 25% return in the whole portfolio. These ideas, I took it from Our Crowd, that is an investment platform that I am part of, and is one of the biggest venture capitals in the world, and then they have invested more than $4 billion in 200 startups. Sorry, I repeat one of the slides. That is a survey that was made with investors, angels, and venture capital, and it's already a little bit how to say has a few years time, but I think it's still interesting to show because gives you the criteria which are the most important ranked by the different type of investor that you will be able to find. This is a very interesting document that I found today, and I decided to add to the presentation. It's a very complete startup investment guide that I found in the Board of Innovation website. I try to put always the source of the information that I show in the presentation. If I don't show the source, normally it's because it's mine or it's different sources. So this is a document that I found especially interesting. You can download in the link that I am showing on the slide, and it's the way it's a 100 pages document. So obviously I'm not going to show the whole document, but I just going to check you. This, for example, is quite interesting. The questions that you will have to answer to the investor what is the team unique capable, or if it is the team capable or to validate or execute the idea, if have a learning mindset, meaning that you are, how to say, you are looking for mentoring, or you are looking for somebody that can provide you not only capital, as I was commenting before, but also helping you to grow and guide you in the growth of the company. This is something that I already have it in one of my slides before, but it's good to see in a, how to say, independent source that they agree what I was telling before. Normally, professional investors don't sign NDAs. That is maybe not the most important thing, but I like to say, because every week I receive, I don't know, maybe 20 requests by LinkedIn to analyze potential projects. Some of them, they continue to ask for NDAs. And normally I reject all these projects in the first moment. So first moving advantage, that is another typical idea that sometimes it's good to be the first, other times it's better to be the second or the third, because you can improve or to do better what the first one has been is normally growing, how to say, building the road, and the other ones can follow and doing better. Other high alerts. What is we want to achieve 1% of this huge market. That is not that is something that many projects say, and this is not something that how to say, it's not a good proposal or a good argument. We have zero real customers, but we value our company in $3 million. The same thing. We will say later that the vanity, how to say, KPIs, like I have so many followers in my LinkedIn or in Twitter or in Instagram. Obviously, I'm not saying that this is negative, but it's not something that is real value. So that is the kind of document that you will be requested by professional investors. Many of them I have already explained it. That is a very interesting table, because they are comparing, how to say, very critical points in different stages of development of the startup. So from concept to launch, to scale up to mature startups. So you can see how the different, how to say, criteria that they will be asking you for being how to say, a potential target for investment is progressing in the different stages that you will be able to find. So you have here a specific, more detailed analysis of every stage. I will not be analyzing each of them because I don't have time, but just want to show you this document for if you have later time to go deeper. I think that could be quite interesting for all of you. And that is another important point. Startup and entrepreneurs should be focusing in learning, and later they could be focusing in earning. This is good even if you have a first failure in your project. You should try to move very fast with the less resources possible in time, money, dedication, and everything. So because in case that you failure, try to do it quickly and learn from that venture, and try to do it better in the second project that you will have to develop, or you will identify to develop. That is another idea is that normally the goal of entrepreneurs should be to create the startup, obviously, to grow the startup, and to sell the startup. Many of the entrepreneurs, they have a problem because they want to continue, how to say, being linked to the company, and they don't want to sell the company because it's his baby or her baby. And this is business. No, it's not. Normally, it's better if you identify that the final goal is growing the company as fast as possible and sell it. Obviously, it's different if you are targeting an impact investment company, sorry, impact entrepreneurship company that also have, how to say, a very strong focus in the SDGs or sustainability or diversity or inclusion. And there is other factors, how to say, involved in that type of projects. Then, in my opinion, should be the, how to say, the way to follow, because not there is different returns, and success can be measured in different ways, and not always money is the most important one. So here you have also a very interesting table or graphs that I didn't knew until I didn't knew I didn't see until today. It's about the different KPIs that you will have to you can focus in the different stages of the startups. Many of these things we have in our, how to say, day-to-day business, but we don't see explain it in a, how to say, in a simple and visual way. So I thought that was interesting to share it with you. Here's what I was talking about vanity metrics. Is that everything related to also social media, or we have won so many challenge awards and that kind of thing. I repeat, it's not negative, but it's not the main goal of the any company to generate followers in Facebook, or to win different, how to say, start a weekend hackathons and these kind of things. It's good for training, it's good for gaining visibility, but it's not the main goal of any company. So validation is a key point of any project, and it's a very interesting, a very important point if you want to get any investment. You have to show to investors that you have been able to identify a problem, you have developed a solution that can solve that problem in an effective and scalable way, especially if we are talking about digital projects. Here is some of the points that I was commenting before. So you should try to validate the problem, validate the business model that you have identified, the solution, and the team. In the problem, you should try to focus in how big is the market, how right is the timing, how good is now the opportunity, and how desirable is the market that you are going to be acting in. On the business model, the viability and the scalability. On the solution side, if you have identified a way to be different and to USP, then really will be valued by the customers or client. And the thing, as I was saying before, you are how to say, you have the right people with the relevant experience and talent to drive this venture successfully. And if you have a track record of doing other projects, please show, because that is a very strong positive point. So in the teams, normally you have always the CEO, the CTO, and the CMO. So the management, the technology, and the marketing and sales, I will say, are the three main profiles that you should try to get for any company. And later, you normally also will have different advisors or mentors that complement the skills and the gaps that maybe the founding team will not have from the beginning. Valuation is something that I'm not going to touch today because it's more than art than a science. Here you can find also different ways of valuation, but this is really, how to say, one of the things that, in my opinion, you should always try to. I think it's better to have a smaller percentage of a project that will grow and be successful than try to get all the pipe on a project that finally will not go to anywhere because your valuation is so high that it's not attracting attention of any investor. So this is also some practical practical tips about how to prepare to pitch. Obviously, you have to practice. You have to train not only the pitch itself, but also your voice, your how to say, your I don't know how to say in English, melody or to cadence, or the how to say, to make it attractive for the people and understandable when you talk. You have to try to avoid some red flags when you talk to different investors or any other event or how to say, activity that you want to present your project. And that is the final document, and is also a link where you can find a very big how to say, database of different places where you can present your project, or investors where you can present your project. I think that I can share with you different links that will help you to identify potential investors or how to say, initiative of interest. So I hope that has been interesting for you. And that is again my contact in case then you want to have a copy of the presentation or ask me any other question related to this topic or any other one. So I'm closing this.
Thank you so much. It was an extensive presentation. We got to know so many things regarding how to pitch to an investor. So we have some few questions to know, as you have told about regarding the team. It is very important to have a great team together. So how to present those team in front of the investors? Can you please tell us just in a few short words?
Okay. Regarding the tips, first thing is I do your homework, meaning
Yes.
don't send the same spam email or LinkedIn message to all investors. Try to then, if you are a edutech or edtech startup, or if you are in a travel tech, try to identify investors that have a special expertise, experience, or network in that particular field. Give you a couple of advice how to do it. You can go to, for example, global events on that particular topic and
Yes.
check who are the speakers, who are the investors in a jury in a competition, who are the try to develop a database using the angel list or Crunchbase about investors or funds that they are investing in specific topics or industries or technologies. It's better to have 50 good investors than really have interest in one particular industry, technology, or topic than try to have 500 investors. Then they you don't know exactly what are their main how to say, priorities. I always
Yes.
I always say that this is like managing a sports center where if you have a sports center with, for example, 50 players and only to play football, only to play cricket, only to play, I don't know, basketball, this is a very difficult way for, how to say, to really improve your cricket, football, or basketball skills because you don't have enough, how to say, players for to play every day. Instead, it's better to have maybe 20, only 20 players for tennis. You can play tennis all the time between them, and it's much how to say easier to learn from each other. So this is applicable for the relationship
Everyone.
between a startup and investors, or a startup pitching in a contest or event or whatever.
Yeah, thank you so much. We have another question that is there is a dilemma. You know that while pitching to an investor, which area should these startups focus? Whether it's product or it is the valuation or it is the financing, which area they should focus on, especially while pitching to an investor?
Well, normally, as I was commenting before, there is 4 or 5 criteria. In my opinion, the
Yes.
most important one is the team. If you have you should go to uh, talk with investors when you have how to say, a good team in place. Then is a balanced team. Then they have also a good funding team agreement, so then they can show to the investors that they are committed. They are fully, totally dedicated to the project. I received a lot of early stage startups that tell me that they are working in other things and nobody is dedicating full time to the project, and this is a red flag. Normally, investors, not normally, I don't know any investor that will be investing in a startup that is not, how to say, there is not at least 1, 2, or 3 people fully dedicated to the success of that startup. The second is the try to think big, big market, something that can be scalable, something that can be replicated in different countries. And this is a very good business card to present to investors. If you, for example, can show to the investor that you have clients or customers in different countries, especially if those countries are from different geographical areas or economic development or cultural, how to say, cultural difference in the countries, you can show that that could be an idea or project that could be interesting in a global scale. So that is another really interesting point. I will say define your business model. Uh, where is the income, different income streams coming? You are going to be using a SaaS model. You will be using
Yes.
other different ways. You have to identify where the money is coming from and who is going to pay for that. And if idea that you have already validate and get some real paid customers, not when you have 500 customers, but only because you are giving the product for free. And I think that this is it's better to wait to go for to present the project to investors once you have tested if these 500, which percentage will continue using the product once you start to charge for the product or service. I maybe there is others, but I don't know if there is more questions. In the presentation were the 4 or 5 points that really are the most important one.
Yes. Yeah, thank you so much, Miguel. One last question. In your opinion, what do you think that as a startup, for example, how do I determine that whom should I reach for my investment? Is it should be venture capital or bank or the angel investor? Where should I go?
Well, I
Because
think
it is no, it is just confusing point for many of the startups.
okay. I don't know how bank works in Bangladesh, but here in Spain, don't finance startups. This is because they don't have a track record of income or how to say or any profit in previous years to show to the bank. So normally, if the bank give you any loan, normally you will have to cover with your personal assets and to be how to say you need to have other how to say wealth that will cover the loan as a personal individual. Later, the I think angel investors is a very interesting way for startups to get how to say support not only with capital but as I was saying before, the expertise, experience, and networking. If the angel investor is not providing all these three things on top of the capital, they really, I don't think that they are angel investors. Maybe they are passive investors. That is totally different. And I think I'm also here in Spain, for example, closing some kind of a strategic partnership or even investment with a corporate can be also another interesting way, because maybe if you are able to test and validate your product with a big company, and that can be company can like how to say approve the product or service, that will give how to say a warranty to other companies in the industry, maybe in other countries, to use it, especially if the company is well known internationally. And grants and subsidies, I'm not somebody that like too much grants or subsidies, but I understand them. They are interesting for a startup, especially for innovation and research development startups that maybe need like in biotech or aerospace or things like that, and really need a huge investment and many years of research to find how to say the right product. Normally, in that kind of projects, public funding can be a very interesting way, because normally private investors will not be how to say investing in research and development. They want to have like a more developed, mature how to say product to or more a shorter time to market strategy. So that is basically, I think, the four main how to say sources of funding for startups.
Thank you so much, Miguel. We got to understand so many things regarding our main session topic. We are really delighted to have you in our session. We mainly we have learned that in our pitching session, it is very important to have team together, and if you are having investment, so prepare a good team and try to have them in your pitching session. So that's very important thing. Hope you have learned. I would like to thank our audience for being with us and learn something, and definitely you will get the slides that we have from our speaker. So thank you, Miguel. Any last words from you?
Well, one thing that maybe I didn't comment before, but could be interesting to comment, is that obviously angel investors normally are more, how to say, they are organized in local business angel networks. I really love cross-border and international business angel investing, even if it is not very, how to say, it's not the mainstream. But I think for any company that want to grow internationally or globally, it's very, very interesting for them to get advisors, mentors, or uh, investors and from different countries, background, cultural background, because they can provide a much faster way for growing internationally. And that I think that we should try to identify ways or frameworks that will facilitate for international investors to become to join together and to invest together for in the because this is also a way for concentrating or gathering investors from all around the world interested in one specific topic like a vertical industry, technology, or challenge. And that is, as I was commenting from the beginning, I think that having, for example, an global tech or travel tech angel investor network is really something that we should try to develop in the coming years, and not so much than the business angel network normally are, how to say, set up or grow from because in a city or region or country, and maybe at the end of the day, I think that you want to have an investor in your company because the value that investor can provide to you, and not because he's living in closer or farther from your living place. And because if you are developing a startup in travel tech, your neighbor angel investor doesn't know a clue about travel tech, he's not providing you real value, even if it is somebody that you can take a coffee every day with him. It's good for taking coffee, but it's not good for growing the business.
Thank you so much. Thank you so much. We are really grateful that you have joined our session and enlightened us with your valuable words. Thank you so much, Miguel. Hope to see you in the future. And thank you, our audience, for being with us and being patient. Thank you all. See you in our next program. I am
Thank you. It
closing
has
our
been a
program.
pleasure. I'm sorry for the technical issue with the slides. I was, as I commented before, I am reachable and I am available at LinkedIn. Anyone that want to contact me, and also they can contact you. And happy to, to be in touch with anyone and think that could be interesting to contact me.
Yes, we would love to be in contact with you.
Okay.
So thank you. Thank you so much.
Take
Thank
care.
you all. Yeah.
Take care
Thank you
and
all.
stay
Good
safe.
night.
Bye bye.